Hi folks, Lee Gettess with the Market Sense for the week of August 28th, 2012. The charts we look at come from the Trade Navigator software by Gettess. And before we get too deep into the charts, I want you to understand what kind of week we have here. The focus all week has been on what might come out of the conference at Jackson Hole this Friday in the Ben Bernanke speech. But we've had a couple things crop up this week to make it a lot more difficult than just waiting for that. First of all, this dude named Isaac came into the Gulf and started spinning around and taking aim at some of the oil refineries and platforms in the Gulf. And that just kind of frightened people a little bit and had some impact on the markets. And then Mario Draghi today announced that he won't be going to Jackson Hole because he's got too much work to do in Europe. This has been scheduled for a whole year. So for him to suddenly decide not to come fueled rampant speculation about what might be going on in Europe. Now, I kind of think that's nothing, but it doesn't really matter. It's really got the markets all bound up trying to figure out what they should be paying attention to. And I think it might cause things to be awfully tight and, well, maybe even not worth trading. And the first chart we'll look at here is the weekly bonds, and you can see bonds are kind of in this little range between 147.20 here at the green line and 149.20 up here at the red line. And it wouldn't surprise me if this is it. They could very easily stay within this for the entire week because, until Bernanke speaks Friday, what are they going to know? And I'm not sure they'll know anything then either. But look, they could break out to the upside. In the big picture, you've got this sideways pattern here for the last few weeks that they kind of broke down from without showing any follow-through. And even this breakdown is still well above the old highs from the end of last year. So all of that is still relatively bullish if you look at the big picture. Of course, this all could be one big distribution pattern that they're rolling over down out of. But in the very short term, there's nothing to suggest that they have to do anything this week other than exactly what they've done. And I think until they get some clarity from someplace, they may just be bound up like this. In stocks, you'll see another tight little range here. Very, very tight between 14.15 here and, well, 14.05 down here. Hey, if they get going strong, they can get up to 14.25 and down here to 13.95, and that's not very exciting either, is it? What we have here, it looks like, is a slow trend up to test and take out these old highs. And they could go a bit higher, but they're just not showing any signs of enthusiasm after taking out these highs. And I know they're not selling off either, but you would expect there would be some enthusiasm, a bunch of stops at the old highs to blow them out higher, and that's just not happening. So it wouldn't surprise me if they make either one more spike up and then blow down, or maybe just run out of gas here, go sideways and kind of roll over. And it seems like the timing going into the end of the month here, the first part of next month, it seems like a good time for something like that to happen. You've got the Jackson Hole thing at the end of the month. You've got the ECB meeting on September 6th. And after Draghi withdrew from the conference in Jackson Hole, there's an awful lot of focus on what he might do because they all assume he's working on something. I don't, but that's what the market thinks. So anyway, that's about all we've got for you. It's really, really difficult to find anything to get into this week. If you do, best of luck to you. Thanks for checking in to see what we think.